are closed. What are you doing? You shouldn't be up trading. The markets are closed. Anyways, guten Morgen. Welcome to Forex.Today, the YouTube community of 20,000 foreign exchange traders. We gathered here today to conduct technical and fundamental analysis with the overriding goal of helping you put together trade plans. However, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne. I am an ex-male supermodel turned foreign exchange trader. Thank you for being here. Been doing this for quite some time. 20 years as a trader, 20 years on the catwalk. So let me know if you have any questions about high fashion or the financial markets. We can, like I said, today the markets are closed, so I wouldn't expect much volume and volatility. But I don't know, we can burn through some charts. We can talk about whatever you want to talk about. I'm cool with that. I'm in my home office working anyways, doing my thing. So why not? Why not do a stream? Why not? So here we are. So like I said, we'll probably burn through some charts and talk maybe some fundies. I don't know. It's up to you. Did you see the huge change in demand for Kiwi dollars? Huge drop in demand for Kiwi dollars. Massive. I thought the demand would increase anyways, but whatever. We can talk about this kind of stuff. I'm sure you're watching the Commitment of Traders report, right? I'm sure you are. Wink, wink, nudge, nudge. Anywho, in the description below the video, you will see links that I'd like you to visit. One is visiting my book on Amazon.com. Imagine you bought it because I wrote it 2008, I think. I'm not actually sure. Something like that, maybe. So would you please leave a review? Tens of thousands have purchased the book, but there's only a couple hundred reviews. So I'm assuming if you know how to read, you know how to write. So could you leave a review? Yeah, there should be at least 5,000 reviews, you'd think, right? So anywho, if you could leave a review, I'd appreciate that. It would motivate me to continue writing a new book. And that is coming. Another link I'd like you to visit is fxbootcamp.com. It will help you become a better trader. You will get 10 times more value than you spend in money. It's $88 a year. I'm certain you'll feel like you got way more value than 88 bucks. Way more. Cool. And lastly, we all need a broker. And trust is a big part of having a service provider, especially when money is involved. What they do is execute your trades through their liquidity partners into the interbanking system. They actually do it. There's no dealing desk. There's no market maker. It's just you click the button and you go into the interbanking system. Okay. Now there are expenses to that, and so they charge fees, but they're a boutique firm. They don't charge very much. They're very competitive. Because they're a boutique firm, they don't have 40,000 people all on the same server, so their servers are fast by virtue of being lean and mean. And they pay swaps. They've earned my loyalty and respect through their behavior in the market, in particular in a time of duress, that proved beyond a shadow of a doubt that they're trustworthy. I believe their business model is based on ethics. It's a symbiotic relationship. They want you to succeed because it's good for them if you trade for years and years and years and years. Many other brokers are not even set up for that. Some brokers may actually want you to blow up your trading account. They never execute your trades because they figure if you drop $500 into an account and blow it up, they can just keep the $500. That's not how Traders Way works. So again, they've earned my loyalty and respect I recommend them to you. I would like you to check them out and give them an opportunity to earn your loyalty and respect. You don't have to click the link if you're worried about tracking and cookies and all that. Just type in tradersway.com. You don't have to tell them I sent you. You don't have to put in a coupon code. There's no, just check them out, bro. Check them out. tradersway.com. And here he is. Quite a lag today on YouTube. What's going on, YouTube? Okay. Ba 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 bo ba bo bo. All right, so dollar flat. Remember, the markets are closed today. Yeah, they're closed today. Okay. Yen weak, Swissy strong, so we don't have congruency. That gives you the opportunity to look at cross pairs. So you could do Aussie yen, for example, or you could do Euro Swissy the other way, for example, or Kiwi Swissy. Now, I talked a little bit, and I guess I could show you. Well, actually, let me do a poll here. Let me poll you. Be honest. Remember, this is anonymous, so I don't know how you answer. So please be honest. Okay, please answer the poll. Please be very, 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 very honest. You're right. Don't lie to yourself. Don't lie to me. Nobody knows what your answer is. But be honest so that you can make this a proper learning experience. Jim says he used QuantBox. Okay, that's fine, but that's proper. By the way, if you need to change your answer, change your answer. If you use QuantBox to review the COT data, then that's fair. I mean, you're still looking at the data, but I don't care if you went to the CFTC and downloaded the spreadsheet. In fact, that would be kind of silly, wouldn't it? But you could. That's what I used to do. But there was a time actually when I first started downloading the COT data from the, I think it's cftc.gov, and it's esoteric for sure. Or not esoteric, that wouldn't be the right, arcane? Archaic? No, arcane. Anyways, then there was a service, and oh my God, I think it was $200 a month to have someone else convert the spreadsheet into graphs to make it more easy. And I think I paid that for a year or so. So a couple of $100 a month. And you're like, dude, a couple $100 a month, that's a lot of money. Well, I used to pay probably $300 a month just for charts. Back when I first started trading, you couldn't open a trading account with a credit card. I mean, the barriers to entry in the beginning were much higher. You had to be pretty hardcore to want to become a Forex trader. Certainly wasn't easy. So anyways, so yeah, I don't, right? FX Street used to report it in the calendar, but no more. Interesting. Oh, is that right, Denise? Okay, but even so, if the report is delayed, I still am most interested. Like, are you doing the work? Are you using QuantBox, that for example? All right, so let's end it there. Thank you, everybody. Actually, I need 2 more votes. I need 2 more votes to make it statistically relevant. I know the community's thin today. I know it's a holiday, but if we can get 2 more votes, it would be statistically relevant. I want to have a reasonable sample size, or at least the very bare minimum sample size required to be able to ascertain reality. Come on now, I need 1 more. 1 more. Please complete the poll. 1 more. I guess we'll just sit here and wait for someone else to show up. What's going on, fellas? Answer the poll. There we go. We got it. Thank you, everybody. Everybody. All right. So 3/4, actually more than that, huh? 84% have not reviewed the COT data. As Jim said, one easy way to do it is the quick and dirty. This is the quick and dirty. I just look over here. Oh, where's my drawing tool? Epic! Oh, I just got an email. I adopted a kid. Yeah. I sent my mother a text too. I'm like, oh, we adopted a kid. She's like, what? I'm like, yeah, a goat. And anyways, our goat is she's sending her cheese to us. It's on the way. Cool. So yeah, we have a goat. She's rambunctious and very smart. Apparently she knows how to open the gate and let the other goats out. That's my goat. So anyways, so we adopted her. She lives in Massachusetts, actually, in the Berkshires. So anyways, so we got cheese on the way. That's good. All right. So Howard's like, hey, did they come out or it's been delayed? Even if it's not, I want to know if you're doing the routine. Delayed or not, I still, what I want to do on this holiday is ensure that everyone's doing the routine. All right. So anyways, if you look at this report, look at the drop in demand for Kiwi. Oh, God. 12.3% drop in Kiwi demand by institutional investors. Oh, my word. So those retail traders that are trading Kiwi Swissy long, they were probably doing okay, and their long position is probably under threat as institutional buyers of Kiwi are leaving. We don't know if they're sellers, but they're just no longer buying. And retail's just doing what it's been doing. It used to work, so they're going to continue doing it because they believe it's going to continue to work. But as we know, every trend comes to an end, and knowing when to stop playing the trend is very, very critically important. So that's a quick and dirty. Demand for Swissy is down quite a bit. Okay. Money's flowing into South Africa. That's kind of interesting. Silver's down. Platinum is down. Cool. Look how low SPX is, huh? So what I just did is I flipped this. The least long is Swissy. So people are selling Swissy. People are selling the yield on the 10-year T-note. Not the price, but the yield. People are more likely selling CAD than buying CAD. Okay. So I'll put it back to percentage long. Lots of still demand on oil. I disagree currently with this, but okay. I disagree currently with this, but that's what it says. That's right. This is institutional speculators, Richard. You would not watch a hedger. For example, what does a hedger do? When the market's falling, they buy. When the market's rising, they sell. What does a speculator do? When the market's falling, they sell. When the market's rising, they buy. You see? For example, if you made breakfast cereal, that was your business. You need corn and you need wheat. So as corn and wheat prices fall, you buy more and more. You're like, oh my God, these prices are cheap. Like, even if I don't need it now, I'll find a way to buy it at low prices. So what you do is you use a futures contract, Richard. And you're like, look, I don't need it now. I have enough inventory right now, but the prices are low. So I'll buy at today's price, but I'll do a July contract for delivery and a September contract for delivery, locking in what I believe is to be low prices. And so you use a futures contract to take delivery in the future. But as prices are falling, you're buying. Okay? But a speculator would be selling. Because what you're doing is you're hedging today's high prices. You're short today, but long the future. All right. And I feel so much depends on the weather. So here's the COT report if you guys wanted to actually see it. These are the eyes of misery, but would you even care? Can we look at price action pivot points today? For sure. So anyways, Swissy's strong today, but what you want to do is, I mean, here's the thing. This is what it is, but it can also be wrong, meaning the market is selling Swissy, which is a risk-on trade. So for those that are buying the S&P 500, they would be selling the Swiss franc, right? But I don't believe that to be the right move. And in fact, right now you can see there's a big shift on the SPX where there's now more sellers than buyers. And then I believe this is going to go up. So you this doesn't do 100% of the job for you. If it did the 100% of the job for you, then we don't need you. Think about that. This is proper data, but you have to think what's happening. And you're like, well, maybe this should be going up if this is falling. Because remember, if the S&P 500 is falling, that's risk off. Money is going to flow to Swiss bank accounts. Okay? I would guess a lot of this could come down, this could come down, this could come down, this could come down. And you have a shift. And you're like, oh, okay. This could go down, but this would go up. So right now, what I'm doing in my portfolios is, I'm basically playing this and this. And if I can get that right, which means this down and this up, that's really my one thing. So in one of the training courses, I talk about the one thing. the secret to life is the one thing. And you're like, Wayne, what's the one thing? And I'm like, that's for you to figure out. And I ripped that off from the movie City Slickers. But my one thing is that if I get that, I got at least 10 trades. And so far, remember how weak the dollar was and how strong the S&P 500 was? Well, now S&P 500 is coming down and dollar's going up, and that's my one thing. And you're like, but Wayne, I'm looking at two things. No, you're not. You're like, yeah, you got an arrow down on the SPX and an arrow up on the USD. Yeah, that's one. That's one thing. Okay? I think of it like this. So anyways. Cool. How pretty, huh? How pretty? How pretty. So dollar markets are closed today. U.S. market, I should say. But so you might want to look. First of all, I don't know if you use this tool properly. Maybe you're like, oh, it's pretty. I like it, but I don't get it. Well, the first thing you might want to check out on a day like today is cool. This one. Oh, look, the trade plan I made for you is working. You're welcome. You're welcome. Compliments of the firm. Make sure you join FX Bootcamp, everybody. Huh? Put a nickel in the plate as we pass it around. Oh, you're welcome, JGB. Look at that, eh? Kick it off 90. So right now, about 250, 260 pips profit on that trade, maximum. Now, you might be in 91 and there's only 150 pips. Yeah. Yeah, only 150. I know. Now, to be honest, as many people in the day trading group know, and I suppose in the swing trading group now, I believe this is what's working now, but that's going to change. That's going to change. Gonna change. These are the eyes of misery. Would you even care? Okay. Big long on the Japanese stock market, but money is coming out. Okay. So we have to watch this. If it falls from 70 to 65 to 60 to 55. Boop, 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 boop. Okay. So we have to watch that. So right now, today, you see what I mean? Neri says, Wayne, will we review QuantBox weekly in our swing group meetings in more detail? Well, you can always ask me. Okay, you can ask me. Sure. But not everyone, most, but not everyone are subscribers, but that's fine. But on March 1st, I have amazing news that probably will provide a solution that will make you very happy. Richard says, hey, with the new guy, okay, will yield curve be abandoned? Well, he's not in charge yet and he hasn't announced anything. But you got to think about it ahead of time. Okay. By the way, look at this. Some things that are expected to be weak are weak. Some things that are expected to be strong are strong. And some are and some not. You see how flat this scatter plot is? Right? Like most of this looks this way. Most of it looks this way. And if you understand calculus, okay, that makes sense to you, right? All right. What does it tell you? What does this distribution tell you? This is real time, by the way. It's not daily, it's real time. It says don't trade. Haha. Flat as can be. You should look at that and go, not today. You should be able to look at this and you're like, oh, must be a holiday. But yeah, Neri, on March 1st, if you're a subscriber to QuantBox, there's lots of new announcements going to be made at that presentation. And one of them will address that concern. And well, over-deliver what you're asking me today. I'm going to over-deliver. And of course, by promising you that I'm going to over-deliver, I'm over-promising and not under-promising. So how about this? I'll definitely address that your concern. And that's an under-promise. There you go. There you go. Wink, wink, nudge, nudge. Okay. Aussie up today. Aussie up today. It's not necessarily what I wanted, but you can see the plan here. And a lot of when I draw these plans, they're not necessarily what I want. They just are plans. And one of the things I teach is for you to stop trying to be smarter than everybody else. I want you to stop trying to beat the market. I'm trying to get you to stop being the first one in the downtrend. And instead, I want you to understand how and why and when the markets move. And part of that is understanding the psychology of the market. There are bulls and there are bears. Now, I need you to be either the bull or a bear, but I want you to understand your enemy, so to speak. And in fact, they're not your enemy, they're your trading partner. Think of it this way. Every trade you make requires a trading partner. If you're long, you need somebody to short. If you're short, you need someone to buy it from you. Every time you exit, you have to sell your position to somebody else. It's a symbiotic relationship. It's a dance. And it's helpful to know what your partner's going to do before they do it. Otherwise, you get your toes stepped on. Or you get in that awkward, you went left and they went left and you had butted heads in the middle of the dance floor. Or one person is on a different time than the music. Have you ever seen that where someone they're just a half a beat ahead or a half beat behind? If you've been in a band, you know how terrible that is. You're like, dude, you're fast. You got to slow down. Stay with the beat. Stay, right? Anyways. And so what I'm trying to because look, at some point you can be the aggressive one. You could be the killer. You could be the zero-sum game person. But I'm trying to teach you to understand that bears are going to try to sell here and bulls are going to try to buy here. And that's that. And so like when I have a plan here, oh, that's a valid plan. I'm actually a bear. I'd rather this come down than up, but what I want is irrelevant. Okay. So anywho, right, this could kind of work its way up over time. And I think if you're a bear, you're still going to try to get this going this way. So now as a market participant, whether you're a bull or a bear, you should know these prices and why they're important to a trader. Try to get in before you're challenged. Remember, left foot forward, right foot back. What happens if you both move the left foot? You get stepped on. So don't buy it here if you're a bull. But Wayne, it's been up and up. No, it's about to do this next. If you're a bull, you got to buy low, bro. And if you're a bear, sell high, bro. Okay. And if you do something different, it's going to be awkward. Okay? Because what happens? You step on each other's toes and then you both look down and then you headbutt each other. Terrible. The date, not going to go so well. Left, left, right, right, back, foot. Left, left, right, right, back, kick. Left, left, right, right, back, kick. All right. Okay, so anywho, there's your Aussie. Aussie yen looks okay, but you know, you want to look at it this way. Aussie yen might look okay. Aussie Kiwi might look okay. Aussie pound you probably want to skip. Aussie euro might be okay. Aussie CAD you probably want to skip. Aussie dollar you want to skip. So this is exactly what I've talked about and trained you on last week and I think the week before. When you look at a trade like this, or maybe if I got QB still open, yeah, or you're looking at a scatter plot like this, that should tell you not macro, but relative strength. Okay. Okay. So like, for example, you see, let me, to the right, Aussie dollar fundamentally is bearish, but it's up today. It's supposed to be down, but it's up. And USD Rand is a strong buy today. And it is a buy today. So what is it? Is dollar strong or is dollar weak? Or is Aussie strong, Kiwi, is Aussie strong, Rand weak, and dollar neutral? Well, WTF, who knows what the heck's going on there? But that doesn't make sense. And by the way, that's why the scatter plots here, you should look at that and go, okay, crosses today. Because if I don't have, and let's go back to what I taught you a week ago and 2 weeks ago. If I don't have congruency here, so this is down, this is up, and this is sideways. Well, what the is going on here? Is this risk on or risk off? No. Let me say it again. Is this risk on or risk off? No. So what do you do now? A, you can walk away, or B, this is where you do relative strength. Sell some yen against something strong that just happens to be strong today. Swissy yen doesn't make sense fundamentally, but technically it's just great. Aussie yen long, great. What about pound yen long? Is you is or is you ain't doing your analysis. So an amateur trader very often comes into these live streams and they're like, Wayne, will you look at pound yen for me today? Why? Wayne, can you look at Kiwi yen today? Why? What's wrong with you? I don't think you're blind. Oh, you're not doing your work. So I'll say to you, well, why do you want me to look at Kiwi yen today? It's my favorite pair. And that's where I hit my head on the microphone and I go, huh? A stinky amateur move, huh? It's my favorite pair. I just love money. I don't care if it's New Zealand. I don't care if it's Australia. Give me some money, honey. So I look at that and like, that would be a dumb move. Why don't you do a relative strength exercise? And right? So anywho, I would say, okay, short this and buy that. What about this? Nope. What about that? Nope. What about this? Yep. What about this? Nope. What about this? Nope. What about this? Nope. So today, 2 trades. Aussie yen long, Swissy yen long. Okay, that's scenario number 1. Number 2, boom. What about selling euro today? Yeah, you can look at that. Okay, so we want to sell this. Should we buy some Aussie? Yep. What about CAD? It's kind of neutral. We're going to sell euro and buy some yen? No. Sell some euro and buy some pound? No. Sell some euro and buy some Kiwi? No. Sell some euro and buy some Swissy? Yeah. Sell some euro and buy some dollar? No. Okay, now you got, right, 2 more trades. Okay, what about this? You want to sell some Kiwi? Great. Do you want to buy some Aussie? Yeah, but we already did that. Okay. Do you want to sell some Kiwi and buy some euro? No. Do you want to sell some Kiwi and buy some CAD? No. Do you want to sell some Kiwi and buy some Swissy? Yeah, but we already did that. Do you want to sell, you see what I'm doing? And that's what you're supposed to do on these scan. Okay? One of the things I taught in FX Boot Camp 20 years ago. Think about it. That other YouTuber that you follow, he would have been, or she would have been, what, 8 when I first started teaching Forex? Okay? So when I first started teaching Forex and they started eating solid food, we would go through this and say, okay, who's stronger, euro or Kiwi? Okay, and you put euro. Maybe. I guess you could, well, they're on wrong time frames, I guess. Daily. Let's do this on hourly. Hourly. All right. So let's do it this way. I'm just going to talk about euro. What's stronger, euro or Kiwi? Euro is down. Okay, just focusing euro. Is euro stronger or weaker than Swiss franc? Euro is down. Which one's stronger, euro or CAD? Okay, euro is weak. Okay, I guess what I'm actually asking is euro weak or strong? And euro is down, and big. I'll put sort of neutral. Okay, what about this one? It was down and then neutral. How about this one? Down. Euro is weak. What about this one? Weak. All right, so what have we learned? Euro's weak, Euro's weak, Euro's weak, Euro's weak, Euro's weak, Euro sideways, Euro sideways. So generally speaking, Euro is weak. But also, okay, USD is weak, and so is Great British Pound. So what does this tell us? Don't buy Euro, but sell pound. Because euro is weak, but pound is weaker. Look, euro's rallying against Great British Pound. So you're like, oh, I'm going to slaughter the great big pig. So let's open up this, let's scan the great big pig. Euro's weak, but this is weaker. Great. Okay. And now you start like, oh, look, I can sell pound Kiwi off of the monthly M3. Okay. And you start putting together plans. Oh, what about pound CAD? What about pound Swissy? What about pound Aussie? Okay. Okay. Selling pound Aussie off the daily 21. Ooh, my. Look it. Down, 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 up. And you get a rollover. And you're like, I didn't even see the rollover. Yeah, it took an entire week. You don't look at big charts. You only look at small charts. So you'll always be stuck in the forest. Small retail traders stuck in the forest. The analogy is you're a hobbit walking through the dark forest. That's dangerous for the hobbits. There are big spiders in the forest. There are ogres in the forest. Okay. Burns like, they're not all young. Of course they're not all young. All right. So anywho, so imagine you were just a bear. Okay. And this is what you're looking at. And you're shorting, for the year. That's too easy, right? You're like, dude, that's too easy. You can't just sell the daily 21 and walk away for 3, 4, 5 weeks and then come back and sell a retracement back to the 21 and then walk away for 3 or 4 weeks. Yeah, you can. Yeah, you can. Yeah, you can. M3 to M1, M3 to M1. Okay, central pivot to what? S2. That's the actual logic. You're like, but Wayne, it went all the way to S0. Yeah, so what? Now what? Okay, M2 to M4. That's what's supposed to happen. M3 to M1. Okay, that one didn't work. Okay. So anyways, central pivot. Cool. Okay. Then what? Probably a front run down to here, reset, down to here, probably that, and then probably that. Yeah. Gregor said New Zealand dairy products will be very important over the next year. Well, it's always important to New Zealand. And I feel it. Okay. And I feel it. Where is it? All right. Prices are up. A lot, huh? 3% is a lot, bro. Yeah, but from a bottom. Yeah, so normally you would say there would be an increase in demand for Kiwi, but I don't know if we're going to be able to hold that. And then, yeah, it's up, but up from what? An incredible low. Huh? Okay, so I wouldn't call that up. It's up from a low. Okay, but let's call it 1,000. That's pretty low. But, you know, I guess you could also argue it's not really low. It's lower than it was. But you could argue 800 to 1,200 is about right. Okay? Okay, that you're sitting around 1,000, and it's about right. It's about right. So you call this, maybe this is one standard deviation, this is one, right? Does anyone remember the formula? I know you love it. Y equals mx plus b. Y equals mx plus b. You're like, how does that make sense? Well, you have an x and y axis. Okay? And an intercept somewhere. And you want to look at the slope of the mean. So you got to look at the rise over the run, which is your m. Okay? And then, okay, what do? You take the, right? You figure out the variance, so the highs and the lows. And then you square root the variance to get the standard deviation. And you get something like, yeah, prices should be somewhere between 800 and 1,200. Okay? And so if you're below, sell the kiwi. If you're above, buy the kiwi. Using statistical analysis of the data set. Oh my God! That's beautiful, isn't it? Will you give me a thumbs up for that? That's beautiful. Oh my God, we're doing statistical analysis of global dairy prices to correlate whether we should be bulls or bears on the New Zealand dollar based on some, right? Oh my God, that's beautiful. It's gorgeous. Huh? Makes me excited. You're like, it's like, Wayne, it's like laughing at your own jokes. Hey, you know what? I love what we do. And that's how I feel. I love the analysis. Love it. Okay? Cool, right? So I once, I don't remember the year, but I once did a presentation at a conference, and it was how to trade gold, oil, and sheep. I wonder if I can quickly find it. I got to log into FX Bootcamp. And then I got to go to slides. I think I might have it under slides. Meet, maps, translate, finance, docs, sheets, slides. Guess I'll search for sheep. I don't know if it's going to be labeled that way. Oh yeah, 2007. In 2007, currencies and commodities. So I did this in PowerPoint. This is in slides, so all the fonts are off and stuff. Yeah. which I translated into how to trade the Canadian dollar, how to trade the Australian dollar, and how to trade the Kiwi dollar. Oh, God, it's beautiful. It's so beautiful. I love it. I love it. I love it. Look at these numbers. Look what we were doing in 2007. And look at how dramatically different my charts are. You're like, oh my God, it's the same chart. Look at these numbers. Gold mining productions of 2006. Oh, look at first entry, second entry. Oh, gorgeous. Using oscillators, using price action. How to trade sheep using Forex. Oh, carry trading. Look at interest rates back in 2007. Japan, 0.5%. Canada, 4.5%. Australia, 6.5%. New Zealand, 8.25 in 2007. Look at us going over swap. Who cares? I'm earning $10.55 a day times 365 days a year, 3,850. I'm getting a 385% return on investment plus currency appreciation. Oh my God, 2007 we were teaching this. Cool, right? And this was at the Forex Trading Expo. So that would have been New York. Or wait, New York? No, that's Vegas. Vegas, baby! Okay. Oh, check this out. It's pretty funny. I did it in Vegas. I did it in New York. And third place, probably Dubai. Cool. Oh, but see, this one's updated. No, they're different. Oh, look, they're different. So I did them, yeah. Vegas, New York, and probably Dubai. Cool. So I'm just noticing now, because I just did that whole talk, and YouTube just finished the Y equals MX plus B. You guys are a solid 4 minutes behind. Richard said, who taught this? Harvard? I didn't go to Harvard for another 10 years. This is 10 years before I went to Harvard. But anyways. But I'm glad Greg brought that up. That was a fun trip in time and perfect for a holiday like this. But Greg's been around too. I don't think Greg's a spring chicken. And he's been around. So it's astute for him to say, hey, watch those dairy prices. Yeah. Yeah. So one thing I was doing over the holidays, I guess today is a holiday. Well, I guess over the weekend, I was studying Jay Powell's history a little bit. I have to give him a lot more credit than I have in the past. So listen to this summarized story of Jay Powell's life. He worked at Treasury for a while. He's a finance guy, worked at Treasury for a while. And then he went out into the private equity world and he made a lot of money. I don't know what he made, $100 million, let's just say. So now he's done. He doesn't have to work. I don't know how old he is now, but it wasn't very long ago where he's done. So what is he now? 65, I'm guessing. I don't know. So maybe in his late 50s, like literally less than 10 years ago. Let me try to remember the number, 2011. So just over 10 years ago, he makes himself $100 million or more, I don't know, and he's done working. And he says to himself, I want to work at the Fed. Oh, he's 70. So, okay, yeah, he's 60. He's 58. But anyways, So he sets himself out, like, first of all, he makes $100 million or more. Okay, is it luck? I don't know. Maybe it's luck. So anyway, so now he's got 100 million. He doesn't need to work. And he says, I want to work at the Fed. Think about that. He says, I want to work at the Fed. He sets a goal. How do I work at the Fed? He says to himself. And he creates a strategic plan. You're like, well, Wayne, how strategic is it? It's so strategic. He goes to a think tank in Washington, D.C. And he works for $1 a year as an intern. A 58-year-old, $100 million intern. The lowest guy on the totem pole. But the reason he picked this particular think tank was the number one problem in Washington, D.C. that was being debated by Congress and the Senate and the White House was the debt ceiling. Ooh, that's interesting. But they knew very little about it. In fact, they didn't even know what day they would run out of money. They just knew they were running into a problem. So Jay Powell says, that's my in. That's my Trojan horse. Everybody's talking about it, but nobody knows what they're talking about. And the Tea Party's in control, so you got a bunch of guys wearing raccoon hats, and they want to change everything. Even if it didn't make any economic or financial sense, they were just anti-debt for anti-debt's sake. And so the Tea Party was leading the lexicon or the zeitgeist of the time. And Jay Powell was smart enough to know that both sides of the party, whether you're Republican or Democrat, whether you're Tea Party or not Tea Party, really didn't know what they were talking about. They didn't even know when they would run out of money and what would happen. So anyway, so Jay Powell says, that's my in. That's how I get into the White House. So again, he finds a think tank that focuses on this type of finance, who gets, right? That focuses on gathering this data from the board. What do they call it? The financial board, the Office of Budget Office, Congressional Budget Office, I guess, the CBO. They gather this data. So anyway, so he shows up, Jay Powell shows up at this think tank, and he's like, I want access to this data. And they're like, we're not hiring right now, Mr. Powell. Right? And he's like, I'll work for free. I'll work for $1. And they're like, okay. So anyway, so now he's got access to the CBO data and lots of computers and lots of tools for analyzing this huge data set. And he spends just a few months analyzing it, and he figures out a couple of things. What day they would actually run out of money, and then what the Treasury, since he's a Treasury guy, what would the Treasury actually do? So he figures out the date by doing all the math, and then he starts going out to promote himself. By himself, I mean the data. So he starts going to congressional leaders and Senate leaders, and they don't even want to meet with him. He really starts meeting with their interns, and he does the presentation. It's very compelling. And then he meets with sort of higher up, low-level people, and they find it very compelling. And then all of a sudden, a lot of the Tea Party guys that were quite radical, they wanted to meet with him. Because like, oh, you want to talk debt? Tell us about this debt ceiling stuff. And so they would have long conversations. They didn't really like what he said, but all of a sudden he was getting to see congressional leaders. And he did more and more of that. And then because the Tea Party was such a big part of the Republican Party, they finally get to a point where the Republican caucus brings him in and he talks to all the Republicans, Tea Party and not Tea Party. And remember, the Republicans, and in particular, the Tea Party folks, didn't want to deal. They didn't want to renew. They're like, no debt ceiling deal. We're not going to increase the debt limit. This is it. No more debt. So Jay Powell Now, seeing all the congressional Republican leaders, he goes in and he says, okay, we know exactly the date, August 11th. That's the day we run out of money. And so a lot of the Tea Party folks and other Republicans said, well, what's the big deal with that? And he's like, well, we actually don't know. And then they're like, so what would happen if we default? What's the big deal if the United States defaults? And he's like, well, actually, we wouldn't default. We would run out of money. And they're like, yeah, we would default on our debts. And like, no, that's not what the Treasury would do. We're legally obligated. So we would pay our debts. We would not default, but we would not have money to pay other bills. So now you guys, since you didn't increase the debt limit, you guys are going to have to figure this out. So do you want to stop sending money to grandma and grandpa, even though you promised them during retirement they would have income? Do you want, and how would that affect their voting for you? Would you get reelected? And they're like, oh, snap. Well, no, we have to earmark that. Okay, old people are going to have to receive their medical and their money, right? You got grandma and grandpa have to have their money. Okay, good. We won't cut that. Okay, so are you going to not pay the military their salaries? Are you going to tell every soldier in America, and you got to remember this is back in 2011. We were still in Iraq and Afghanistan. Okay, good. So you're going to default on all the soldiers serving overseas in active combat. You're going to stop paying them? And they're like, oh, snap. Well, we can't do that. Okay, well, the Treasury would then have to decide. Should we stop paying our correctional services and let empty all our jails and all our prisons into the street because we can't afford to run the prisons? We can't afford the guards. We can't approve, we just empty our prisons? Oh, snap. Well, we can't do that. And he's just started doing all this. Like, what would you want to do? And do you know what? On August 11th, they raised the debt ceiling. That was Jay Powell. And guess what Obama did after he realized, because Obama's Democrat, guess what Obama did when he realized that it was Jay Powell that got the Republican Party to come around and raise the debt ceiling in 2011? What do you think Obama did? He put Jay Powell at the Fed. And I'm like, oh my God. Jay Powell said, I want to work at the Fed. He came up with a strategy. He did the analysis. He played the politics. And like in less than a year, he's working at the Fed. And I'm like, oh my God, I have to give him credit. Like, well played. Who does something like that? Who does that? Okay. Okay. Yeah. No, but like, oh, that's cool, man. I think that's really cool. I think that tells you a lot about him. So you might not like his policies, because remember, we very often say we don't like what's happening, so we don't like the policy. The policy's bad, and therefore he's bad, and he's a monster, and he's an idiot, and he's stupid, and he's ruining everything, and it's all his fault. And we never take the time. Like, I met a lot of people that hate Donald Trump. Hate. Crazy radical hate. And I'm like, have you read his book? No. I'm like, well, okay, you can hate his policies and he obviously comes across from time to time as truly as an idiot. Okay. But like, Do you know who he is? Have you read his book? Do you understand how he grew up? And, oh, his dad gave him all his money and all that. Well, do you really know his father? Do you really know what they did? Do you know some of the things? Did you know how long it took? Do you know what he did in the 80s to become a real estate developer in New York? He wasn't just given $1 billion and he's, do you understand how he runs his life? Do you understand, like, he doesn't, like, for example, do you understand he's the type of guy that doesn't take lunch? He eats lunch at his desk because if he just met with a bunch of businessmen and went out and had, $500 lunches, it's just a waste of time and money. And he doesn't want people in his enterprise that think and act that way. Like, he eats lunch at his desk because it'd be a waste of time and money. Like, you might hate the guy's policies and you might hate what he stands for, and you might hate the way he looks and speaks and acts, but you understand who he is as a person. Don't confuse politics and personality as, as person. You might know the personality, but there's a person behind that, and all that. And I'm like, I don't care that you hate him, and I certainly don't love him, but before you hate, do you know what you hate, or do you just love hating? And and of all the people I've met that just passionately hated him, nobody took me up on the offer. I'm like, don't even read the whole book. Just read the first half of the book. Because the book is interesting where, obviously there's a ghostwriter. And all he did was he gave his daily agenda to a ghostwriter who wrote a book. And so it's like, on this day I did this, on that day I did that, on this other day I got this phone call at this time, and I got this other phone call in that time, and then I had dinner with this person, and this is what we were talking about, and this was the deal, and this was the politics, and then the mayor did this, and it's literally a calendar, and you're like, dude, what a good way to meet somebody. You can still hate them, but don't, you know what I mean? And it's just so funny. And like, so I was and again, this isn't like I'm a pro-Trump guy and this is my speech, No, it's more like I was reminded the importance of our biases that lead to our opinions, that lead to the way we act. Or in this case, we're currency traders. We have to understand biases are in our brain. We have to make sure we have the right bias for the right time. Do I buy the dollar? Do I sell the dollar? What about Kiwi? Oh, well, we're watching global dairy prices. This is important because then we can understand why Kiwi is strong or why Kiwi is weak and where it'll be in the future and where it'll be in the past. And we're trying to see reality and then form our bias around data. And so all I say is, like, I was reminded where I could also easily fall into that trap where, let's say Powell's an idiot because he was late to raising interest rates. That's easy. But then you could say, well, we didn't know at the time. And maybe he did make a mistake. Well, there's 19 other people on the committee that also made the mistake. Maybe it's his job to lead the committee, and that's what the committee wanted. Whatever. But it happened, and they're dealing with it. Okay? And the downside, I suppose, was we have an economy adding 500,000 jobs, even though we added 5% to the interest rate. That's the bad side of what occurred. What if we were all standing in line waiting for our free soup and potatoes because Jay Powell was wrong the other way, the Fed was wrong the other way, and we're in a global depression, not jacking up interest rates and adding 500,000 new jobs, right? So we got it wrong and we have inflation. Well, it's better than deflation, I suppose, right? So anyway, so I was reminded, like, part of what we should do is know the people behind the policies. Remember where I said when Ben Bernanke, who I had never heard of, was being nominated to become, and then it was pretty obvious if you're nominated, you're almost certainly going to become, chairman of the board of governors of the Federal Reserve banking system of the United States. I'm like, who's this dude? So I bought 2 or 3 of his books, and I started reading about the policies and the papers that, that were behind the man. And so this was another great time to, like, I feel like I have a lot more respect for Jay Powell, not because of the let's say the policies and procedures he's implemented as the person in charge of the Fed, but just as knowing more about him as a human being. So again, you might not like his policies, and he might have been late, and he might have created inflation, and he might have done this and that, and you don't like those things. It's kind of like yelling at the quarterback. All right, you get out in the field and you throw a ball over the stretched out hands of a 6'3", 300-pound person that's going to kill you. And you throw it accurately and time it perfectly through the crowd. He's an idiot. Okay. So the armchair quarterback, right? In this case, okay, this guy is not an idiot and he made mistakes. Well, you might have made some mistakes too, the same ones or different ones. But at least we got someone that doesn't seem to be an idiot. So yeah, he's an idiot, but he got into the Fed within a year, and then within 10 years, he's running the Fed. But besides that, he made $100 million. You're like, okay. All right. You're like, yeah, but he's still he's still an idiot. You got to be careful if you get stuck in your own narrative and not reality, I guess is what I'm saying, right? Okay. So he earned a degree in politics from Princeton. Then he went to Georgetown and got a law degree. Then he became an investment banker. He worked at the Carlyle Group, which is heavily connected. So then he zipped over after Carlyle, zipped over and worked in the Treasury under President Bush. Then he founded Severn Capital Partners. Okay. Made his money there. President Barack Obama elected him to the Board of Governors, not just the Fed, the Board of Governors in 2012. Remember, the debt ceiling was at the end of 2011. So I'm telling you, within a year, boom, he's at the Board of Governors. That's higher than the being a president of like a Fed bank, like, right? Like Bostic is the president of the Atlanta Fed. No. He would have, his first job would have been being the boss of a Fed president. Like, dude, within a year. Okay. And then boom, Trump made him chairman of the Board of Governors. Just like that. Like, oh my God. What is it? Like within 1,000 days, he's running the whole show. Amazing. All right. So instead of being, despite being filthy, stinking rich and a degree from Princeton and a JD from Georgetown and working at the Treasury and playing politics to get elected to the Board of Governors and now running the whole Fed, besides all that, he's an idiot. Yeah. Neri says he was all business full time. Well, remember that he's a poli science major. Okay. And then a JD. He trained himself from a young man to work in Washington, D.C., not necessarily Wall Street. His investment banking and private equity likely was related to Washington, D.C. type deal flow versus, he didn't go to Harvard. He didn't work at Goldman Sachs. He didn't work in, it was different, right? He's a Washington, D.C. guy. And so that's where he's like, I want to work at the Board of Governors. And he knew how to work Washington, D.C. Like, think about it. Within a year, he's on the Board of Governors. Nobody knew him. And within a year, he's talking to the President of the United States. And the President says to him, well done, Jay. Will you accept if I nominate you to the Board of Governors? And Jay Powell says, oh, I don't know. I never thought about that. Like, oh my God, good for him. So anyways, I'm happy. Again, you might not like the politics or the policies, but I'm glad we got smart people in charge. Sometimes when you watch congressmen and women, you scratch your head and you're like, oh my God, these guys are idiots. I like to think that, I'm glad we got some smart people in charge of some important things is all I'm saying. And the rest is armchair politics. Sky Killer, is it me or is the new community way to watch Swing Trading Group recording laggy? Oh. I don't know. Well, let me check. So here's the one from last night. So even though it was a holiday, I did the day trading group. So we're going to meet again tonight, or in this case, at 4 p.m. So let's see if it's laggy. Not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Tomorrow's a holiday in the United States of America. Oh my God, am I wearing the same outfit? No. And so I think we should just keep it short and sweet because doesn't look laggy to me. Get the volume and volatility you expect if we have significantly thinner trading conditions. So that is a risk. Unusual trading is risky. So let's just say your technical analysis may not lead to the results you would typically expect. And so that ain't no good. Right? So anywho, so we'll burn through the charts. I got to get the chat going. I don't have chat going. A bunch of other things. Hang on. Doesn't look laggy. There's the chat. There it is. Cool. All right. So anyways, yeah. So let's burn through the charts. Gotta move my wine. By the way, bought this wine 5 years ago. That's the last of that one. Hang on. It's not drinking and working if you've had it for 5 years. All right. It's the reason for working. All right. So anyways, let's take a look at here. No. USD seems to be doing okay in, this period. So we'll call that the last couple of days. No, not laggy for me. And I feel so much depends on the weather. These are the eyes of misery, but would you even care? All right, so cool. So yada, yada, yada. So that's happening. Typically, the stock market would be open right now, but it ain't. We can go back and see if anything's changed over here on the indices. No, of course not. Not on the hourly base. Take a look at maybe some crypto, see what's going on there. Richard says, what would we do without you? You're a good man. Oh, but the best thing about me, Richard, is my modesty. All right, so up, not up. Different time frames. Let's move this to an hour. Let's move this to an hour. Let's move this. It's on an hour. Let's move this to an hour. Oops. Move this to an hour. Move this to an hour. And, well, I guess if you're looking at some of this, a lot of more up to sideways, but, you know, it gapped up over the weekend. So a little more bullish, not so much. So, again, it doesn't look like as much trading, but, you know, it'd be interesting if people aren't trading stocks and futures and commodities and stuff. Maybe they're going to roll over and you know, trade some ADA. Maybe. What do we have in play as far as technicals? 3909 with a target of 4678. Cardona. Yeah, I mean, it could, I mean, look, here's the thing. We only have it set up for the bulls right now. So the bulls have already made this trade last night. And that's the trade that they see. Now, remember, we don't know who's right. Okay. But that's what a bull is going to do. So the reason you don't want to buy high is what would a bear do? A bear is going to play the stop. I'm telling you. I know this. And you're like, well, Wayne, how do you know this? Because that's what a bear is supposed to do. So if there are bears, that's what they're setting up right now. So to buy it high, you're going to get penalized because this is what a bear's strategy looks like. And that's why I try to teach you bullish and bearishness so that you can anticipate what the other side is going to do before they do it. So if you're going to buy low. Do you buy up here? No. Some of the time you'll make money, but much of the time you'll lose. So you buy low and then you jam your stop. And bears will sell high and then they'll jam their stop. So we're approaching a bear zone. So somebody might say sell at 41. Someone else might say buy at 39. And now we're done for the week. And amateurs fight it out in between and get slaughtered. Taking a look at some exotics. Okay, we already looked at Rand losing value like crazy. And there's an interesting trade. And remember, Euro's not even strong. Richard says, does the interest going up or down show you any more information on COT data? Yeah, of course. That's why I covered it today. So look, 80%, 81% of the market is long oil and interest went up. Okay, 70% of the Japanese stock market are buyers, but they're losing. We're losing buyers. Okay, a 12% decline in buyers of Kiwi. Well, is that bullish or bearish? We lost 12% of bulls. Is that relevant information? Uh-huh. In particular to Okay? Retail traders may not know this data. So 87% of retail is long. Now, look what QuantBox says. If I go to Kiwi Swissy, for example, so we got to go to a cross currency, and we pull up Kiwi Swissy. And in this, right? First of all, look, retail's 80% long, and QuantBox says sell it. What does that mean? Okay. Let's see. Taking a look at Kiwi Swissy, we see that retail traders are 80% long and 20% short. We consider this information most useful when a market is an extreme reading from retail traders. If the retail crowd is 60% or more positioned to one side, we get a +1 or a -1. Currently, the Kiwi Swissy gets a reading of -1 in this category. Remember, if the retail crowd is very long, we look to short, or vice versa. They're long, and it's dumb money, and I hate calling it that, but that's the nickname. Dumb money is long, and smart money used to be long, but is getting short. They're moving from buyers to sellers, and they're doing it very quickly. Oh, God. Oh, God. And we're projected to be down as low as 56.5 in a week. 56.5 in a week. That's a 100 pip drop this week, is what it says. Is that helpful information? Oh, I don't know. You do you. Okay? You do you. I suppose if it saved you from one bad trade, it would pay for the entire month. But don't sign up. Go blind. Okay, what else going on? Metals, and when the dollar's strong, it doesn't benefit my position. So now I have to I'm in a situation where praying doesn't hurt. Okay. So palladium and platinum are in similar groups. So I could look at this differently. First of all, I could organize it this way. And there's silver, and then platinum. Platinum is not the same as palladium. They're in the same family. It might be used for similar products or projects. But is there any reason why I like palladium over platinum as a trader? Swap. Yeah, you're right. So anyways, this is not much of a trend. I don't really see pivots being used by the traders. The high isn't great, the low isn't great. And it's not a good market under these conditions, or at least on this time frame. That's yearly, so it doesn't look very good to me. If we go monthly, we can see, are we playing on monthly pivots? And then let me zoom in a little bit. And let me ask you this. If R1 is the projected top, or is the top, what's the projected bottom? According to the training I've given you. S1. Oh, so that worked out perfect. So I'd say this kind of tells me that traders are using, for platinum, they're using monthly pivots. They don't seem to be using annual pivots. Okay, let's analyze the current month then. This projected high, or sorry, that high projects this low. And I mean specifically $923.80. And we went there and stopped quickly. So I'd look at that and say, yeah, I think platinum traders are using monthly pivot points. So what's the future? You want me to predict the future? Well, okay, you could get one of these next month. Okay, or you can get one of these next month. I don't know the future, but I know the charts. Okay. Okay, oil charts. Okay, what do price action pivot points say? Roughly speaking, very, very close to M is equal to 0. So what does that mean? Ain't going anywhere. Yeah. Okay. Go to one last move on euro dollar. Let's see. I'll end it here today. So the current plan, sell it at 107.5. We're at 106.80. The target is 106.5. So I'm trying to make 100 pips minimum. And, oh, it's sleepy. Oh, sorry, not 106.5. 104.5. Sorry. I'm trying to make 300 pips. And right now it's sleepy. I only got, what, 75 pips. And it's nothing. I'm doing nothing but collect swap. But euro dollar at Trader's Way, euro dollar pays a lot of swap. It's the most traded currency pair in the world by a lot. And Trader's Way chooses to pay you an amazing swap. Thank you, Trader's Way. Huh? T-Dub taking care of their traders. Lovely till your mum. Okay, so I'm just hanging on during a holiday, see if I can survive. Like I said, hope's not a strategy, but praying never hurts. I have my, right? I can't lose money. I'm collecting swap, so I'm already profitable because I'm earning swap and I can't lose money. So nice. Cool. It's a good day, huh? Don't let it get away. Okay. So if it's going to fall, it needs to fall soon. It may go a little too high because of the holiday, but this last little bit, I'll do it this way. This last little bit, if we're trending down, needs to stay down. Okay. So we're at 69.16. The next level is 69.50. So in the next 30 pips, this needs to fall, technically. But remember what I said, even to the day trading group last night, your technical analysis is not likely to work as well as normal because we just don't have the market participants. Technical analysis is a self-fulfilling prophecy. But if nobody's here, then it doesn't work. A tree in an empty forest won't fall if there's no gravity. If there's gravity, it'll fall and it'll make a sound. It's not the emptiness part, it's the gravity part. There's no gravity. Okay? So, look. Nothing will make the tree fall if there's no gravity. Nothing will make Aussie dollar fall if we don't have active participants in the marketplace. Somebody has to sell this. Okay? And because there's a bit of a downtrend, I think it's more likely going up based on people getting out of a short than people buying. Because remember, you would have more volume if people were buying. If people are getting out of shorts, then you have less volume. Volume is falling in a scenario like that. So anywho, where's the volume coming from? Are we adding volume or are we losing volume? If we're losing volume, then the green candles are bears leaving the market. But my thought is 24 hours from now, when the stock market does open, maybe those bears come back. Or maybe I should have taken profit too as a bear. Who knows? Only time will tell. Piggy, 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 can't you see? Sometimes trades just hypnotize me. Okay, so waiting. Okay, doesn't seem like anything's changed. We're caught up on the monthly S, waiting for maybe what? A rally back down, one more target. Cool. Alrighty. I think I've taken up too much of your time. But thank you for being part of our community. I appreciate your enthusiasm and your inquisitiveness. Makes these live streams fun. So it's a dangerous world out there. So I want to just remind you, we say it every day, but I mean it every day. Peace on earth. I like peace on earth. That means we all make money and we all raise our standard of living. Okay? Your kids won't be entitled if you're broke. Maybe that's not true. Well, anyways. But anyways, if your kids are entitled, you might as well be rich. How about that? So, and nobody gets, anyways, let's just leave it where it was. Peace on earth. May the pips be with you. May your profits be above average. You have a wonderful day. If you're in my day trading group, I'll see you at 4 p.m. It's not the New York close because the New York ain't open, but at least we have another opportunity to take a look at the charts and set up the Asian session. And of course, by Tuesday, it'll be all good. There's not a lot going on this week. We got some Fed speaks And then I think if I'm using my brain properly, I think Friday we have PCE. But I don't really have anything else on my brain, so maybe we'll look at the calendar later. But PCE at the end of the week. Okay. Oh yeah, the meeting minutes. But I think we already know. I think there's so much transparency now and so many Fed speakers, and the press conference is so blunt. I don't know if the meeting minutes are really that important. I guess we're trying to figure out if anyone would be dissenting in there. But from what we know, Bullard and Mester, I believe, they didn't dissent, but I believe we'll see in the meeting minutes that because it'll say some of the members, okay? Some of the members wanted 50 basis points, not 25. And I believe that was Mester and Bullard, at least. So that, to me, that means we already know that the Fed is going to raise to a higher level. What's being priced in now is 5.5. That's why I'm buying dollars. But it may actually be higher than that. It may actually keep going. It might go from 5 3/4 to 6 before we pause. Okay. And so Richard says a little bit more of a hawkish tone. Yeah, but we lost a dove. The Fed lost a dove. Brainerd was a dove. Well, she's gone. Another politically savvy person, huh? Oh my God. So now she's gone, serving on the Council of Economic Advisors. She's gone from second in charge and hawkish to now what happens if Jay Powell's a hawk and he nominates someone else to be vice chair as a hawk. Now we got a hawk, two hawks running the Board of Governors who are the bosses to the FOMC. Okay? You might be a made man or a made Marian, but you ain't a boss. Okay? So anyways, interesting. So that's our week ahead. Should be all right. Click the thumbs up button as you head out. Maybe leave a comment on the recording. Would you do that, please? Just for YouTube. If you leave a comment, it's not like I make a nickel or something. Leave a comment. Let's help our fellow Forex traders. The more we trade the same, the better off we are. We all make more money if we all trade the same. Cheers.